Now, Didi did price this IPO conservatively. Some thought that it might fetch a valuation of up to $100 billion. There's regulatory pressure. There's really stiff competition. What do investors thinking about buying into this IPO need to know?
Look, I'm not a broker-dealer, but I think it's absurdly low. Like Jim Cramer said, you should back up the truck and buy the sucker as much as possible. I mean, it's completely underpriced at $14 a price per share. And in terms of competition, what competition? What competition you're referring to in China? They have, I was saying in China, they have what, 90% of the market share? No competition there.
Okay, I'm talking about 200 other companies in China, which, yes, are much, much smaller. But now Didi is in the regulatory crosshairs, and we know how quickly that can flip if the regulators start to look at a company. We saw that with Ant Group. It's also facing incredibly stiff competition in Latin America with Uber. So there's lots of competition, Christian.
Respectively, look, what the CPC, the organization that does trade, they have, what, 54 people there? Nothing's going to happen in that, at least in my opinion. Number two, I'll give you a number of why we're not really, well, I'm not concerned about it, 13 million. What 13 million means is that's how many drivers Didi has on their platform that basically depends on them for a living because they got 90% market share of China. They're not going to do anything with them versus Ant or crack down on Didi because there'd be too much of
What makes you so certain? What makes you so certain? I mean, a lot of other companies have been caught in the crosshairs, and we've actually seen the effect on markets. We pointed to this earlier, but Chinese companies, the big tech giants, have really underperformed this year under all of that pressure. And I go back to Ant Group, Christian, $100 billion wiped off the valuation because it got stuck in the crosshairs. What makes you so confident?
Ginger, fair point across the board. I think, again, I'll just refer to 13 million people 13 million drivers depend on their livelihood with Didi. There's no way that CPC is going to cut down on that and cause social unrest because of that. This is something that differentiates them between Alibaba, between Ant, beyond anyone else. 13 million people are dependent on it. And that's why I'm quite bullish on it.
And Christian, let's talk about the global landscape and the global play then. Part of my question as I look at Didi and the whole landscape is, model-wise, which makes more sense in local delivery, breadth or focus? Didi, it seems to me, has not only, the ride hailing, it's got electric vehicles, it's got food delivery in Latin America. It's got all of those different plays with different, investors on the side as well. But then you've got some focused players like your Lyfts, like your DoorDashes. DoorDash has been pushing hard in the U.S., for example. Is Didi going to gain some kind of data advantage or scale advantage for its approach as it expands internationally?
Look, my gut, it's going to be a combination of both breadth and depth. And simply this is in China and their core market, it's going to be purely focused on depth. They got 90% market share. They got, 400 million annual active users. They're going to dive deep into that and expand because, look, I'll give you one statistic. By 2030, 70% of the population in China are going to be major cities. And frankly, most people are not going to have cars. So they're going to be using Didi, hopefully, right? In other markets, they're going to go for breadth. And the reason being is, as Deirdre mentioned, there's competition. LATAM, there's a ton of competition. You can't just basically go deep in ride sharing. You're going to have to have a lot more wider offerings. So that being said, it's still negligible in terms of the capex that they're spending in these other markets. So I think it's pretty, it's a pretty minuscule issue at this juncture.
So, Christian, what happens as Didi does try to invest in some of these smaller growth businesses? In the past, through either different equity deals or debt deals, they have shifted their ownership stake in those rising businesses. Is it possible that equity investors in Didi could lose control of those going forward, and that investors should be thinking about that?
Possibly, right? But I think then you also have the upside of you getting equity in possibly a new entity and so forth, right? So I don't think that's going to be a big consideration.
Hey, Christian, the other discussion going on is what the Chinese are thinking in terms of how they will dominate in various sectors, how they will back perhaps local players over international players. A lot more talk about NIO over Tesla within China. Clearly, Alibaba is a big media story, and now Didi and ride sharing and mobility. I just wonder, do you think this is another signal about their longer term ambitions?
100% agree on that, right? I mean, I think Didi is such an amazing homegrown story. As Dieter mentioned before, they basically beat Uber, right? And they basically been able to win on many fronts. And I think it's something where the government itself is going to put most of their muscle behind it. Yes, they're going to crack down. They're going to make sure that these 13 million drivers get fair compensation, et cetera, et cetera. But I think most of that is just kind of window dressing at the end of the day.
Christian, let me give you another number. Didi, yes, it's the dominant player right now in China. Its ride-sharing business is profitable, but its margin on each ride is far lower than that of, say, an Uber, 3% versus a 20%. So why should it be valued higher than Uber? And what is going to pay for all of these ambitious and expensive ambitions in units, business units, from food delivery to autonomous driving? Should investors not care about profitability here?
No, they should. That's a spot-on statistic. I would only say, and I'll give you this, is really my thesis is simply this, is going back to that number. In 2030, 70% of the population in China, maybe by that time, about 1.6 billion, are going to be in the cities. And they're not going to be driving, right? So there is some ability to close that delta between the 20 and 30% that they're currently doing right now. But if you look at their top line number, they're almost doing double what Uber's doing, right? What did Uber do last year? By 11 billion. Didi did 22 billion in the midst of a crazy pandemic. There's going to be a couple other upside as well. As we transition to a post-COVID, you can just have some macro head tailwinds there. You can have the autonomous driving that they're going to pick up. I think they're doing the right strategy. And of course, in China, disposable income is increasing as well. So you can have some expansion in terms of GDP as well. So I think those are going to be some favorable tailwinds.
Right. Although investors, American investors at least, have paid more attention to that bottom line than the top line when it comes to ride sharing and gig economy. Christian, we'll continue this conversation another time, I hope, and we look forward to seeing how Didi opens. Thanks so much, Christian Cadeo.
Thank you. Cheers.